Ladies and gentlemen, good afternoon. Welcome to Keystock Corporation 2021 Third Quarter Financial Results Conference. Today's meeting will be jointly chaired by our Chairman Peter Chen and CFO Jasmine Hong. They are joined by the executives of the business groups, including Zhou Huang, GM of Information Technology Business Group and Commercial and Industrial Business Group, Harry Yang, GM of Medical Devices Business Group, Michael Lee, GM of Business Solutions Group, and April Huang, GM of Networking and Communication Business Group. This meeting will take about 1.5 hours. The agenda is as follows. First of all, CFO Jasmine will go over our company profile and our Q3 results, as well as business highlights. Afterwards, Peter Chen, our chairman, will talk about business updates and outlook. Then Michael Lee, GM of BSG, will go over some updates of the Business Solutions Group. Then we will proceed with questions and answers. Before we start with the presentations, please be reminded of our safe harbor notice. All the forward-looking statements in the presentations contain risks and uncertainties. Please also take some time to read the safe harbor notice on slide number 4. Now I'd like to hand over to Jasmine, our CFO. Good afternoon. This is Jasmine Hong, CFO. Welcome to today's physical investor conference. Let me just take off my face mask so that the sound quality will be better. I'm going to firstly talk about our Q3 results, and then I'll hand over to Peter for our business update and Q4 outlook. One key agenda that we have is that we will have Michael from our BSG group to talk about the strategic positioning of BSG, because we've been hearing a lot from our investors about the strategic roadmap of our business groups. Today, we will have Michael to talk about the global roadmap and footprint of BSG. Now, let me first talk about our group. Keystock is a global technology group with businesses spanning information and communication, medical, smart business solutions, and networking communications. We were established in 1984, so we have been established for 37 years. We are listed in Taiwan with a ticker of 2352. We have a capital of 19.7 billion. Currently, under the group, we have 15 listed companies here in Taiwan. Total number of companies under the group is 194. Because we have sales office and manufacturing sites in Taiwan, but overall, the number of consolidated companies under the umbrella was 194. We have a workforce of more than 33,000. Manufacturing sites are in Taiwan, China, and Vietnam, and we have sales office around the world in 198 locations, with 2 R&D sites, mostly in Taiwan and China. And as for the first 3 quarters revenue breakdown by geography, Asia accounted for 46%, Americas 31%, Europe 21%, others 2%. In 2020, our revenue was 191.7 billion or $6.5 billion USD. Up until now, for the first 3 quarters, our revenue already reached 164.1 billion NT dollars, up by 22% YOY. It was approximate 5.8 billion US dollars. So we expect that we stand a good chance to see our revenue reach a new high this year, exceeding 200 billion NT dollars. As the revenue in the first 10 months already reached 183 billion NT dollars. As for our ESG practices, we paid much attention to sustainability and improving our sustainability results. Starting from 2007, we published our very first CSR report. And from 2009, we have been achieving third-party certification once in every 3 years. With the leadership of Peter Chen, our chairman, we work with the alliances under the Grand Fleet to invest more in ESG practices. So in 2021, we were named a Forbes World's First Best Employer 2021. We are also a recipient of HR Asia's Best Companies to Work For 2021 award. Actually, for Keystyle, we won the Best Companies to Work For award for 3 years in a row, and also the We Care Most Caring Companies award for 2 years in a row. Plus, BenQ Materials Corporation also won the Best Companies to Work For award for the first time. We also are a constant winner of Taiwan Corporate Sustainability Awards besides Keystyle, which have been winning the Sustainable Individual Performance Social Inclusion Leadership Award, Corporate Sustainability Reports Award, Electronic Information Manufacturing Award, Golden Award, Taiwan Sustainability Action Award, Decent Work and Economic Growth Silver Award, Taiwan Sustainability Action Award, Quality Education Bronze Award, and Sustainability Comprehensive Performance Award. Our subsidiaries under the group also are a constant winner of TCSAs. BenQ Materials, for example, won the Corporate Sustainability Reports Award, Electronic Information Manufacturing Industry Silver Award, and Taiwan Sustainability Action Award, Clean Water and Sanitation Copper Award. Also, TopView won the Corporate Sustainability Reports Award, Electronic Information Manufacturing Industry Silver Award. Going forward, we will work with more of our Grand Fleet alliances to win the recognition of the industry in terms of ESG. So let's look at our business group. We have ICT, Medical, BSG, NCG, and others. Medical, BSG, and NCG make up for our business, high value-added business. Their revenue are all above 10 billion NT dollars. Medical, 11.9 billion. BSG, 20.5 billion. NCG, 21.5 billion in revenue. More than 10 billion, we can call this a sizable scale. And actually, under each business group, the subsidiaries are deep-rooted in their respective sectors. They are not new in the industry. Because of this, they help us to strengthen value transformation so that these 3 high-value-added business groups have been able to achieve sizable scales. What's more, along with high-value-added business groups, we also have high value-added product lines under ICT, because to drive value transformation, we also need to optimize our existing business, which is the ICT group. So far, our efforts have been paying off. For the first 3 quarters of this year, the high value-added ICT products accounted for 8% of our revenue. We leverage our existing technology to enhance the value of products, and we also work very hard at developing high-margin products as well as elevating the value of ICT products through M&As. So for the first 3 quarters, the revenue share was already 8%. These ICT high-value-added products include professional display modules, such as maritime, industrial, and medical displays, and IoT integration solutions, as well as high-end video surveillance products. Moreover, under the group, we also have others, which has a revenue of 10.7 billion. Namely, under this other segment, we have BenQ Materials, which offers functional films, optical films, and polarizers, as well as battery materials, which are also seeing growth nicely. Now let's look at the Q3 highlights. For the first 3 quarters of this year, our revenue, operating income, and net income attributable to Kista were all the highest in the same period in the past 10 years. EPS was 3.72 NT dollars, which was already higher than any single year, full year EPS in the past 10 years. For the first 3 quarters, revenue was up by 22% YOY. OP income was up by 24%, and net income attributable to Kista was up by 127%. ROE achieved 15% compared with 12% in 2020, which was the full year figure. As for the Q3 revenue, it grew 11% YOY. The main drivers were medical and BSG, both of which booked a double-digit growth. Medical grew by 23% and BSG was up by 22%. Meanwhile, ICT revenue also grew by 9%, mainly thanks to increased demand in business applications and ICT high value-added products' higher revenue contribution as the result of Kista's effort in self-development and acquisitions in recent years. NCG's revenue contribution remained relatively unchanged, mainly due to shortages of materials, shipping containers, and port congestion. Lastly, because we have gotten quite some questions from investors, I would like to explain this again. In the past, we recognized AUO's shareholding under the equity method. That means we had to book investment gain or loss from AUO based on our shareholding percentage. From May this year, we changed the accounting treatment of AUO's shareholding to fair value through other comprehensive income, or FVOCI, meaning that from May this year, AUO's P&L will no longer be recognized based on our shareholding percentage as a non-op item of Kista. So the ups and downs of AUO's P&L will not have a big impact on our non-op performance, and fluctuation in its earnings will not affect our EPS. Also, with the FVOCI method, we will get to recognize AUO's cash dividends as well. We can recognize the cash dividends from AUO times our shareholding percentage and recognize it as a non-op item. So the cash dividends from AUO will be booked as a non-op item under dividend income for our reports for our financial results next year. With cash dividends, we will have positive and only positive contribution from AUO's shareholding. Now let's look at the financial results of the third quarter. Net sales came in at 57.2 billion, up by 5.5 billion or 11% from 51.69 billion from a year ago. Gross margin was 14.5%, same as a year ago. And gross margin was up by 11% YOY. OP income was 1.9 billion, down by 69 million or 3% YOY from 2.05 billion. This is mainly due to an increase in OPEX on the back of rising raw materials and shipping costs, etc. So OP income went down slightly by 69 million YOY. However, fortunately, because of our proactive action, our revenue increased by 5.5 billion during the same period, which helped us to make up for the loss. So our OP income was still less affected as a result. As for non-op income, in Q3, we had a positive contribution of 566 million. Net income was 1.95 billion. Net income attributable to KISA was 1.39 billion. EPS was 0.71, down by 0.33 NTD YOY. Again, this is because of a net OP income decreased by 69 million NTD, and also because of the 600 million income from valuation changes as a result of the recognition of Alpha Networks last year. On a QOQ basis, net sales was up by 1.21 billion or 2%. OP income was up by 75 million or 4% YOY. QOQ rather. Net income was negative 2.8 billion. In Q2, we had a non-op income of 3.3 billion. In Q3, there was a 500 million income. This was because of the changes to accounting treatment of AUO's shareholding. Because we are using IFRS rules, it was considered as a disposal of assets. So the total number was about 2.8 billion. And also because we disposed of some other assets in Q2, which gave us more profit. So this is actually in line with the nature of non-op income, which is not a constant contribution, and it is actually fluctuating and changing according to different activities at the company. Compared with 1.93 in EPS in Q2 this year, EPS was down by 1.23 QOQ. Amid the pandemic and many uncertainties and challenges such as port congestion and component supply tightness, we think it's more meaningful to examine the first 3 quarters results. Net sales for the first 3 quarters was 164 billion, up by 29.5 billion or 22% YOY from 134.5 billion. Gross margin also improved from 13.9% to 14.7%, up by 0.8 percentage point. Gross profit was up by 29% YOY. OP income was 5.6 billion, up by 1 billion or 24%. Net non-op income was 5.3 billion, up by 4.4 billion YOY. Net income was 8.9 billion, up by 4.86 billion YOY. Net income attributable to KISA was up by 4 billion. EPS was 3.72, up by 2.08 from 1.64. Next slide, revenue and OP income. For the first 3 quarters, our revenue and OP income reached record highs in 10 years, registering double-digit growth. In 2018, our revenue grew by 14%. In 2019 and 2020, by 9% amid COVID. This year, we have been growing at 22%. For our OP income, it is also on a growth trend, going from 3.3 billion in 2018 to more than 40 billion in 2019 and 2020. And for the first 3 quarters of this year, it is already at 5.6 billion. So that was an overview for Q3. Let's look at our gross margin. Because we're working on high value added transformation, so I think this is very important. In 2017, our gross margin was 11.9%. You can see since then we have been on an upward trend. For the first 3 quarters of this year, we are standing at 14.7%. So during this 5 years, our gross margin actually was up by 2.8 percentage points. As for EPS, we were at a near 10-year high at 2.69 in 2017. But for the first 3 quarters of this year, we are already at 3.72 NT dollars. Moving on to balance sheet. Total assets was 181.01 billion. Some numbers that are worth mentioning here. Firstly, inventory. At the end of September, it was 47.9 billion, up by 5.9 billion QOQ, which was in line with the industry average due to raw material supply tightness and port congestion and other challenges. So inventory increased quite some more this year, up by 15.2 billion YOY. The second figure that I would like to mention here is the financial asset at fair value through other comprehensive income, which is the FVOCI that we mentioned. At the end of September, it was 1406 billion, down by 3.3 billion QOQ from the end of June. This is a non-cash valuation item related to AUO shareholding treatment change. Each quarter, we valued the shareholding of AUO. At the end of September, AUO's share price was about 17 NT dollars, and the valuation was lower than that of June. So this would go up and down based on the share price changes of AUO. Of the FVOCI, besides our shareholding of AUO, we also have holdings in Radium, which is an IC designer, in which we own a 6% stake, and this company will soon pursue public listing. Long-term investments was down by 11.9 billion, and FVOCI was up by 12.6 billion, also due to accounting treatment changes of our AUO shareholdings. Next slide, key financial ratios. Inventory turnover was 81 days, up by 4 days QOQ and 9 days YOY. ROE was 15.1%. Next slide, revenue breakdown by business. Let's look at ICT's revenue. Monitor accounted for 42%, projector 5%, ICT other 4%. ICT high value added accounted for 10%. So overall, monitor's revenue share has dropped from more than 50% to 42% in Q3. As for our high value added business, medical accounted for 7%, BSG 14%, NCG 12%. Revenue breakdown by business. So far, medical BSG and NCG accounted for 33% of our revenue and was up by 22 percentage points since 2017, during which the high value added business share of revenue was only 11%. Originally, we expected that we would be able to improve the revenue share of the high value added business to more than 33%. However, due to supply tightness of components and port congestion, the share has stayed at 33% for 3 consecutive quarters. Also, we have been optimizing our ICT high value added product portfolio. Today, they accounted for 8% of our total revenue and has increased by 3 percentage points since 2017. So if you combine the ICT, high value added product portfolios, and the revenue shares of the 3 high value added business groups, they together accounted for 41% of our revenue in Q3, up by 25 percentage points from 16%. Moreover, Monitor's revenue continued to grow steadily. Its revenue went from 81 billion in 2017 to 93.9 billion in 2019 and more than 70 billion for the first 3 quarters of this year. So the revenue amount is still growing. However, its revenue share decreased from 59% to 43% as a result of increase in the high value added product portfolio. So this is in line with our vision, which is to grow our high value added business to make them account for more than half of our revenue. So this was an update on our first 3 quarters results. Now I would like to hand over to Peter for business updates and outlook. First of all, welcome to today's investor conference. We are very thankful that we get to meet you face to face. This is a rare occasion, especially when in the past year that the pandemic didn't get better. Instead, it got worse. So the previous 2 investor conferences were held online. And because of the online format, we couldn't have sufficient interaction. For that, I would like to apologize to you. And it really pleases us that as far as the situation goes, the pandemic seems to be easing in Taiwan, in other places of the world, with the increasing vaccination rate. So today we are meeting here face-to-face at the BenQ headquarters, and we would like to take this opportunity to share with you in more details about KISA's strategies and our viewpoints. By doing so, we hope that we can help you better understand our progress and the progress we've made over the past 8 years. So especially in the past year, we've done a lot, as Jasmine has shared with you. In the past, people considered us as a display concept stock or panel concept stock. We have turned that around. Previously, in the investor conference, we were asked why we were so connected with the panel industry. Of course, the panel industry is a good business. It's a good industry, but the problem is it is a highly volatile industry and business. Take AUO, for example. During 2011 and 2012, it lost a total of 120 billion NT dollars. In 2017, our EPS was 2.69 NT dollars. That was a good year for the panel industry. But then the EPS went down to 1.82 in 2019 because of AUO's loss at some 19 billion NT dollars. So there's a lot of ups and downs in the panel business. And also, AUO's capital size is about 5 times as ours. Its capital is 90.96 billion, whereas ours is only 19.6 billion. So the drastic ups and downs had big bearings on us. Hence, making us closely interconnected with the performance of AUO. This, of course, put a lot of pressure on our management team because the capital size of AUO is so big, more than times of ours. We are under the pressure of making a balance feed. So that is why we decided to make a change. Because of COVID, demand for some applications has strengthened between the second half of last year to the first half of this year, up until September of this year. The demand for panels improved significantly due to many reasons, such as the rise in working from home and learning from home. When people are staying at home for longer periods of time, they found that they need an extra notebook computer. And with a notebook computer, they need an extra monitor. And many people are asking for larger size TV screens. All these reasons boosted the demand for panels. So the panel industry enjoyed quite a boom between the first 9 months of this year. Innolux or AUO each made a profit of 50 billion NT dollars. But it's like riding a bicycle. When you go uphill, certainly at some time in the future, it will go downhill. And that ups and downs really concern us. In the past, panel stocks fluctuated a lot, and they often went below the cash value. So it was difficult for us to make any change. But this year, because the situation has been different, we have identified an opportune time. This year, AU's share price averages at 35 or 36 NT dollars, but we didn't make the change at that highest point. Instead, we made the change when the share price was 21 NT dollars. This year, the valuation gain from the accounting treatment change of AUO shareholding was 33.8 billion. It is actually still lower than the situation where we didn't do any change at all. Because if we take the 250 billion and times that by 7%, we will get 3.5 billion or 3.6 billion. That's just the number for the first 9 months of the year. It is already higher than the one-time valuation gain that we recognize, which is 33.8 billion. So we didn't make more from making the changes in the accounting treatment of AUO. What we did, however, is really showcase the results of our value transformation, because we are working on elevating our gross margin and our OP income. We want to demonstrate the results of our operating performance. So because of COVID, we identified this appropriate time when the share price of AUO was much better. We took this opportunity to make the change to the accounting treatment of AUO's shareholding, because it has been really difficult for us to navigate the ups and downs coming from the P&L fluctuations of AUO. It is such a hard job. We don't want to do that when volatility is so high, because when volatility is too high, like a roller coaster ride, you will disappoint your shareholders and also your employees, as well as the families of your employees. As Jasmine has shared with you, because of the accounting treatment change, we are no longer affected by the ups and downs in AUO's P&L. Plus, when there's cash dividend distribution from AUO, 7% of that will contribute to our cash flow. As for Q4, we don't know how it will be, but I think you have some idea. But if you look at the payout ratio, you can times that by 7%. That will be the contribution to our profit next year. I think you are all experts here. You will know that by resolving this issue, we will be able to demonstrate the results of a Kista's value transformation. We are doing this in a very transparent way, and we will no longer murk that up because of the extremely larger capital size of AUO. In the first half, the EPS was 3.01 NT dollars. It was already higher than the full year EPS of last year, which was 2.54 NT dollars. We really felt some of the changes are taking place at the moment. Right now, for the time being, some challenges are materializing. Do you know the CPI of Taiwan? It is 2.68% at the moment. It was just released a couple of days ago. And on November 12th, the US CPI was as high as 6.2%. And just a while ago, it was 3 or 4%. And a few days ago, it was 6.2%. So it was extraordinary. Everything is seeing higher prices. You go to a restaurant, you will see all the dishes have seen their prices risen. And it's the same case with raw materials. It's so outrageous. And just recently, TSMC announced that the foundry service price will be increased by 20%, and then Samsung follows suit. It just making things worse. And so on top of the price hikes, there are even more price hikes going forward. And also we have the situation with the power crunch in China. Many upstream high energy intensive industries have been severely affected, such as steel maker or aluminum makers. They all need to use a lot of energy, but they are seeing their costs rising significantly. When they use more energy when they are allotted, then they will have to face a steep price. So the cost has been rising a lot. Moreover, supplies are in short and everything is having a higher price. So there are a lot of uncertainties, a lot of challenges. There are so many disturbances in the industry. If you look at some other companies that have a big scale, they have their costs increasing by tens of billions. Unfortunately, most of the raw materials of key components have already had their prices risen. So also, as I said, CPI and PPI both increase fast. What would happen next? Inflation will materialize. And with inflation, everything gets more expensive, but our wages stay the same. Meaning that we won't have extra money to make any purchases. So people are either not buying or deferring their purchasing. Therefore, in the second half, we have seen B2C demand shrinking significantly. Notebook or monitor or other B2C brands have been severely affected, especially starting from September. And we are seeing Q4 to be even worse. At Kista, we're relatively less affected because some of our major customers are really strong in the commercial space. So while we are affected to some extent, we can still stay immune to the negative impact. This is actually a situation that I have paid much attention to and I have raised my concern over. Starting from September this year, the situation has gotten worse, and I think October is even worse. So for the fourth quarter, we need to be really prudent, and because things that really concern me are become a reality. Component supply tightness remains. A lot of companies are just missing one or two key components, and that makes them unable to make shipments. Just because of a deficit of two or three components, shipments cannot be made. These components are very expensive, but when demand goes down, customers will cancel orders or ask for a lower price. That would deal a big impact on companies. What would happen is that high inventory raw materials will need to be absorbed. Whoever gets excess inventories will end up feeling the brunt. So ultimately, it all comes down to good inventory management. It's better for a company to lower its inventory level as low as possible. I've talked about this 2 quarters or 3 quarters ago, but I think the situation is becoming more of a reality today. Because we are conscious of that, so in the first half, we did our best to make money to increase the buffer. So for the first half, it was already more than 30 billion because we knew back then that the second half would be tougher. We think that whoever gets to make more money in terms of revenue or profit in the first half would probably be better off in the second half and also for the full year. Some people said that Kista is not performing really well in Q3. That's not a worry of us because we had foreseen that, not just us. Most of the companies here in Taiwan haven't had a really strong Q3 because the demand has been less than expected. That's a situation that we have already foreseen, and we think the situation could get worse in the fourth quarter. Therefore, it is important to ensure that you have sufficient buffer to handle the challenges that are going to come in the rest of the year. In the first 3 quarters, our EPS was 3.72, and last year it was 2.54. And we are just at the third quarter, and we still have the fourth quarter to make more growth. So please rest assured, we have already been aware of the challenges, and we have made risk controls in our operating activities. So please rest assured that we know what will be coming. Our goal is to stick with our value transformation strategy and to drive growth year after year. This is something that I have been asking for my team and also myself, and I believe that you will be able to see more progress, more achievements from Kista. I hope that we can have some time for Q&A because it is quite a rare occasion that we finally have to get to meet face-to-face. So I would like to just try to be succinct. Since 2014, I've made this 9-year vision the goal is to achieve our vision during this 9-year span. The goal is to make our high value added business to account for more than half our revenue in 2022. So you have heard from us that the 3 high value added business groups and the ICT high value added product lines together accounted for more than 40% of our revenue. This year, thanks to stronger demand for monitors, we've benefited quite a lot. And in the first half, it grew by 24 billion and 29.5 billion in the first half. So we've had sufficient buffer there. In October, we were up by 30.5 billion. So this year, we are looking at a high growth year. More than 20 billion will come from our high value added business and high margin products. So you may ask, since we are aiming for reaching the goal next year, in 2013, you were at 110 billion. Next year, you're looking at 20 billion. So you're almost doubling your growth. And most of the growth will come from high value added business. What is your next step, you may ask? On this slide, I will change 2 words. And for the timing, I will change, but I'm not going to disclose that just yet. But this revenue here, I will change it to profit. Currently, we continue to increase our shareholding in the partners under our grant fleet. We are going for public tender offers or acquisitions. If you look at data, image, or top view, you will see that they are performing really well this year, despite the COVID pandemic this year. Many of our partners under the grant fleet have been performing very well. And actually for next year, some companies are going to grow even at a higher pace. So basically, we are hoping to help our partners to have better performance year after year. What we do is that we try to help them improve their fundamentals and their profits and revenues and gross margin. Then we also are increasing our shareholdings in them so that they can make positive contribution to Kista. So if you deduct that profits by the PPA, then we would have more revenue streams. So we are making a lot of financial adjustments. I'm asking Jasmine, also our Chief Investment Officer, to help us keep optimizing our financial health. With the addition of more than 10 partners into our grant fleet over the past 10 years, we are building a really nice base. Today, we are looking to reach the goal of making high value added business to account for more than half of revenue, and soon they will account for more than half of our profit. And we really look forward to showing you the results of our value transformation efforts. We will do our best to realize the vision, and we will do it steadily and reliably. We actually are putting a lot of pressure on the executives. The executives that you are seeing here, they are working really hard. We gave them the mission to grow revenues and also the bottom lines. We hope that through the partnerships with our grand fleet of alliances, we can generate more contribution to Kista. we are really pleased that over the past years, we have created synergy across the Grand Fleet, and we have been getting recognition from more companies in the industry. In the beginning, it was really difficult for us to find partners and persuade them to join us. But today, on a daily basis, we get a lot of calls asking to be a part of our Grand Fleet. Because a lot of companies, when they join us, they are seeing their revenue growing by more than 40% on a yearly basis. So Kista is going to bring more unsung champions to our Grand Fleet, and we will keep lifting the ceilings so that we can strategically utilize the resources to help our partners expand their scales to create an economic advantage in terms of economic scales. Ultimately, we want to make sure that every company under the Grand Fleet will increase in their competitiveness. And in turn, they will benefit Kista in our value transformation roadmap. As we expand our scale, as we bring in more battleships into the Grand Fleet, then we will be able to drive industry transformation. Do you believe that the medical industry will be the next growth driver of Taiwan? Actually, Kista is the leading investor in the medical industry among all ICT companies here in Taiwan. Under the group, we have precision medicine. We also have preventive medicine. We have been doing a lot, and we really expect to see Taiwan to rise to the top in the medical industry because Taiwan has top talents, medical professionals. They have the chance to really be the best in the rest of the world. Now, also through AIoT, we are making different fields smarter. We are injecting AI into different fields and leveraging software and our domain knowledge. To transform field applications to help optimize different use cases. Also, under Kista, we have networking business. Networking business is like infrastructure. Without such infrastructure, there's no IoT to speak of. During the COVID pandemic, we have gotten used to meeting online. However, we have found that there are a lot of problems. There are a lot of noises, and people sometimes just drop lines, and lags happen a lot. This is because 5G technology isn't quite popular, isn't widely adopted yet. So this is why we will need to do a better job at deploying infrastructures for 5G or even for 6G. 5G or 6G is just like the high-speed rail in the information age. With that, you can help AIoT to achieve better transformation in the digital age. So these three segments, these are the key directions and the future of the industry. And Kista is in each of these three segments. Today, they each have a revenue about 10 or 20 or even more billion. And for medical, it's already at more than 10 billion. And with the addition of revenue coming in during the fourth quarter, we can expect great things from these three business groups, and we expect the growth speed to even accelerate going forward. We are quite fortunate that we have been able to stay on track for the past 8 years and will continue to do so in the future. they will not only account for more than half of our revenue, but in the future, they will account for more than half of our profit. So please stay tuned for more great news from Kista. We will continue to increase our bottom line. We are going to say goodbye to the low margin time. As for the fourth quarter, I think I've already covered most of it, but all I can say is that we have to be extra careful because of the market conditions. At Kista, we will be very cautious in hopes of reducing the impact from the uncertainties and in hopes of making positive contribution to the profit of Kista for the full year. You may be concerned about next year's outlook. Please rest assured we have made plans and we expect to see growth. Usually what I say is always followed by what I do, as you can tell from what I've been doing in the past 8 years. Of course, we will not take you on a roller coaster ride because we have a capital size of nearly 20 billion and revenue of 200 billion. With this size, we need to go slow and go steady. So once again, thank you all for your support, and I hope that you can continue to support us. We will work very hard and we will work very prudently to do our best and make you see better performance from us. Thank you. Next, we will hand over to Dr. Michael Lee. Thank you for participating in today's meeting. I would like to take some time to go over the roadmap of our Business Solutions Group, BSG. This BG was established 6 years ago, and since then we've been working on improving the business. The group's name is called Business Solutions. It is because we focus on addressing business problems. And during the process, we created solutions. In other countries, there are actually many companies like providing business solutions. In the top Nasdaq 100 companies, actually 30% of the companies are business solutions companies. So what are the questions that we are addressing? You may ask. In 2000, the combined revenue of Taiwan's listed companies was 4 trillion, and this year it is going to be 40 trillion. Our GDP in 2000 was 10 trillion, and this year it is about 20 trillion. Next year, GDP per capita will likely exceed 30,000 USD. However, the number of newborns went from 400,000 to less than 150,000 this year. And so this year, Taiwan's these companies operating in China's total revenue was about 60 trillion in 2030. It will be 100 trillion. However, the number of newborn would be 150,000. In 2010, the number dropped below 200,000 for the first time. These people are going to join the workforce in 2030. So after the year 2000, we have about 400,000 of people joining the job market every year. And in year 2030, the number would be just about 200,000 per year. So meanwhile, Taiwanese companies are growing by 25 times more. However, at the same time, we only have half of the workforce. That means that each company would have to grow by more than 50-fold during the period to boost their performance. This situation, this problem is especially significant since the year 2010. In China, every company is called a company of more than 1 million employees, but has our per capita output increased? Did the output increase come from adding more people or just by per capita output increases? Actually, compared with Korea, which has a GDP of 50 trillion, Taiwanese companies operating in mainland China is on par with that. So this is a really weird situation. In Taiwan, we actually generate much less than what we generate overseas in terms of GDP. So in the past, Taiwanese companies have been utilizing resources of other countries to do a good job to churn out their profits and revenues. And in the past 2 years, a lot of things have happened. First of all, decision making has accelerated because all the decisions are being made online. This is a big change. So what are the challenges or the opportunities that we're seeing for Taiwanese companies? So this is the organization of ESG. We have been building this for the past 6 years. We are a group of more than 20 listed companies in Taiwan. We have about more than 4,000 people. And this year, our revenue breached $1 billion USD for the first time. We work on helping customers doing vertical and horizontal integration. Under the group, we have DFI, a IPC company, and also Esg. So these two companies represent two singular industry sectors, IPC and ICT. In the past, IPC and ICT didn't interact with each other that much, but recently, the interaction becomes even more in high demand because customers are asking for software and hardware integrated services. We also have Partner, which is a flagship company working on restaurants and retail businesses. We have more than 30% of market share in Taiwan and also more than 30% of share in Singapore. For Esg, we have a very good investment portfolio here. This company has more than 300 R&D personnel in information security with a revenue of more than 1.5 billion this year. We also have a company on digital customer service and analysis. And in terms of financial services in sector, we have a big market share. It is providing digital customer share analysis. And we also are working with Oracle, which is the biggest consulting firm. We are working through advanced tech company, which is able to help customers perform ERP integration. We also have Corex, which is a cloud company in South Africa. We also have Stat Inc., which is an online sentiment analysis company that is working on election public opinion analysis or sales sentiment analysis. We have DFI as well, which is a cybersecurity company. It performs analysis and feeds the insights to Esg for local service and sales and marketing. So in terms of online and cybersecurity integration, we actually have built a really good foundation to work with our customers. ACE is an automation company in the US. It has a branch for applications, also in terms of HR systems. We already have some investments in Keystar working on HR, especially with green energy management. In Taiwan and also in mainland China, we have more than 3,000 companies using our HR systems. One of the biggest convenience stores is using our HR system. In that franchise, each of the convenience store has more than 50 employees, and it takes a lot of time for that company to calculate the wages on the analysis that it has to perform is just significant. And the data rate is more than 160%, and we have a very high loyalty from our customers. To resolve all these problems and pain points for customers, we work on a lot of applications. We hope that we can help our customers to manage their sales and their purchasing as well as inventory and management. So we are, in terms of commercial, we are deploying AI solutions. AI is just like robots. So the number of robots robots being deployed at the company is a key decision-making factor of how digital that company is. But when it comes to digital transformation, there's a limit. However, you work hard, you only have 24 hours a day, and you only have this many of employees. But with AI robot, you can go beyond the limitations. So with robots, you can have digital governance and then digital auditing. For example, you make a call to a bank, all the conversation is being recorded and it's being listening on not by people, but by a robot. For example, Amazon is selling its products through robots. In Taiwan, we have a largest breakfast franchise. It is able to predict the amount of materials and the amount of customers that it's going to get in the next few days because of our systems. So because of that, our customer is able to downsize its IT department by 20%, but at the same time raising its revenue and profits. So we are able to do online and offline O2O integration from purchasing, sales, customer feedback, all the way to sales prediction. Basically, with implementation of our systems, customers get to reduce their IT workforce by 20% through the implementation of AI robots. Today, many breakfast restaurant franchises offer online ordering for customers, and there are also delivery systems. Last year, our restaurant-related business grew by about 30%. Moreover, in terms of office management, it is important for companies to manage its workforce and how they utilize their time. This is actually a very popular system for companies in the US. There are 3 HR-oriented companies of the Nasdaq top 100. The first companies has a market value on par with TSMC. These companies allow their customers to make profits and realize high sales results by working at home. Moreover, there are robots in manufacturing setting. You have physical robots, but virtual robots are on the rise. For example, TSMC is building a factory in US, and they realize that it's important to have cloud operations because when you are working outside of Taiwan, you still have to feed your data back onto the headquarters here in Taiwan. So cloud is imperative, but at the same time, do you trust clouds? Do you trust the data that you get from cloud? So you have to have good control from end to end. From CRM to customer site delivery to purchasing, you need to have RPA to help you monitor all the operation. So these are our key portfolios. And of course, for hospital, it is important to have high precision. So we keep working on integration. To achieve these objectives, we need to have a different approach. We are doing this by having and making investments. But as Peter said, with commercial and industrial, you have to work with long life cycles. You need to make sure that 20 years from now, these products, these applications will remain relevant. So you need to be able to produce these applications yourselves. As for value-added services, we have to rely on our partners, and we cannot afford to do everything on our own because we have some weaknesses here in Taiwan. That is why at Gista, we are working on distribution business first. We want to distribute for the major brands overseas, such as ERP and database. To bring these systems to Taiwan as an agent. Then we deploy our own teams and our own investees to perform the services. In Taiwan, we are now working on the biggest POC. Then we are extending to Southeast Asia, Middle East, Europe, and US. And in Europe and US, we mainly are a device provider. So this is our performance this year. Device accounting for 32%, SINSP 26%, VAR 42%. In Taiwan, we have 48% here in Taiwan, more than 1 billion. So a lot of that come from the 8%. For Taiwan to pursue digital transformation and to have RPA and also AI implementations, these are all imperatives. As we go toward the goal of being more than 100 trillion, we need to have good AI to help us achieve efficiency. Actually, in Taiwan, a lot of companies have been very, very active in the deployment of AI. And in Taiwan, a lot of financial holdings companies are already using AI. In the US, we mainly focus on device delivery because it is very difficult to replace the service companies there. But in Asia Pacific, Middle East, and Africa, we are seeing great opportunities. For this slide, this is the key thing. This company, this horizontal line is IPC. It is A1 is much bigger than A2, which is also a big company, but AI has a market value 4 times of A2. It has deep and wide marketing footprint. Although we can go global through devices, but you need to have short chain supply. But compared to that company, BSG is operating in more than 100 countries around the world, and we continue to make investments. We are confident that we will be able to catch up with A1, that company. Currently, we are already catching up with that in more than 50 companies. In the vertical axis, S1 is a leader, and it's especially strong here in Taiwan. In terms of our revenue and profit, we are in the middle between S1 and A1. And of course, there's another company, but it is so extraordinary, so I didn't put it down here. And these 2 companies are the key focuses. They have big market values. Ultimately, for end consumer, end users, they require software and hardware and services to be integrated. This company continues to invest in that one, and that one is investing in this one because they are pursuing software and hardware integration. So these 2 groups are very different from each other. Like when you go to a carpenter, you will find saws there, but in a hospital, there are also saws there, but they are different. They're for different uses. In the past, these 2 sectors did not interact much with each other, but based on the experience of other companies in other parts of the world, they are converging here. So these are our benchmarks. Currently, we are seeing many opportunities emerging, and we are growing steadily and nicely as we have planned. Thank you.
We will now open the floor for questions. Please first state your name and affiliation before asking your question. Hi, I'm Kevin from Fubon Life Insurance. Thanks for taking my questions. My first question is for CFO. Kista now recognizes the AUO shareholding under the FVOCI method. Will you recognize AUO's 2021 cash dividend in full as a non-op item, or only the amount incurred post-May, after the adoption of the FVOCI method? Hi Kevin, to answer your question, AUO's 2021 full-year profit, multiplied by next year's estimated payout ratio, and then multiplied by Kista's shareholding percentage, will be recognized as a non-op dividend income, which will be a cash flow item. Thank you. That's very clear. For the second question, Peter, earlier you said, we should be cautious about the impact of rising inflation on consumer activities. But, you also expressed optimistic views about next year's profit outlook. Could you give us more color around the growth outlook of each business segment? We've been actively developing medical, AIoT and networking and communication business. Why? Think about it, will these three sectors go into decline next year? No, it's impossible. This year, our medical business group has maintained 30 to 40% growth, despite the pandemic, when the entire healthcare sector has been hit hard. From May through the end of July, when the Level 3 alert was implemented, everybody stayed away from hospitals. In Taiwan, especially, people are very disciplined, all wearing masks. People rarely get cold today, so ENT clinics have been doing very poorly. Their business has dropped significantly. While this year has been challenging for the healthcare sector, our medical business group posted significant growth. Medical care is a common basic health need. With the population dwindling in Taiwan, when it comes to medical services, we should not confine ourselves in Taiwan only. That's why Kista engages extensively with partners in the medical field as we extend our presence around the world. Kista has outstanding, global ICT talents, as well as the BenQ brand and OEM resources. We have every reason to take the lead and help our partners go global. The world is 2 or 3 quarters into COVID vaccinations, and has achieved herd immunity in many places. Except in Taiwan and mainland China, where stringent control measures are still in place. People don't wear masks anymore, even at crowded large sports events. But I think wearing masks is most effective at reducing spread of the virus, probably more so than vaccination. I'm convinced that the market will likely see growth next year, as long as more people wear masks and get vaccinated. With Kista's ICT expertise and the depth and breadth of our competence in the medical sector, we will shine in the market. Michael just gave an overview of BSG. In fact, Kista has made extensive and deep investments in AIoT-related business. BSG posted more than $20 billion in revenue for the first 3 quarters, and is likely to register high growth next year too. Separately, despite the robust demand this year, NCG has been substantially affected by semiconductor supply shortages. In the face of chip shortages from Broadcom, Qualcomm and power supplies vendors, there is a severe lack of semiconductors to make products despite the strong order momentum. NCG has been hit hardest so far this year due to its high reliance on semiconductors, so I'm slightly conservative about its 2022 outlook. In terms of visibility today, the semiconductor supply deficit may be slightly relieved next year, but there will not be much change. While other industries may experience visible improvements from this year, ensuring semiconductor availability will still be a big challenge for NCG. I can boldly predict that the supply tightness will definitely last until the end of next year, and the shortage of Generation 3 semiconductors will be especially severe. To be more precise, we should call them Group 3 semiconductors, as the next generation enables different applications, rather than replacing the previous generation. The third-generation semiconductors can handle high-frequency, high-temperature, and high-voltage applications, and things that the Group 2, such as gallium arsenide, and silver phosphide, cannot handle. The Group 3, such as silicon carbide and gallium nitride, are mostly used in electric vehicles and network communications. These are not new technologies of the last few years, but they are more mature now, aided by the rising demand for EVs. An electric vehicle has many electronic components, nearly 50%, up from 10% or so in the past. With the sharp rise in electronics components consuming the majority of the world's semiconductor production capacity, and the surging demand for network communication products, Group 3 semiconductors have seen explosive demand. Meanwhile, this has eaten into the capacity available for the existing non-advanced process. However, I believe Kista would post reasonable growth next year. This year, during the first 9 months, we grew at a pace of 20 to 30%, by nearly 30 billion. For next year, we will not purposefully pursue top-line growth, but instead, will focus on driving bottom-line growth, for which, we will strategically and creatively leverage our resources. In the end, it's the numbers that speak the loudest. This year is much better than last year, and I certainly hope that next year will be even better in order to demonstrate the foundation that we laid over the past 7 or 8 years. We will work harder to boost profitability. I also ask our Chief Investment Officer and CFO to be more creative in how we strengthen Kista's cash flow and bottom line, and how we help our big fleet partners to accelerate growth. This time next year, let's verify whether I am right or not. Hi, I am Sai Song-ru, from Shin Ray-ja. With Alpha Networks, Hytron and IDT under the group's umbrella, does NCG plan to provide overseas telecom operators with one-stop shopping services for Open RAN equipment? April, would you answer this one? Mr. Sai, thanks for the question. 5G is definitely the main growth driver of NCG, so the direction you mentioned is valid, and it is also a growth indicator we have been tracking. NCG has several growth strategies. First, reinforcing the existing business, such as switchers. NCG consists of Alpha Networks, Hytron and IDT, among others. IDT, a local SI, has been performing consistently strong. Hytron's wired broadband business has been growing so far this year. So, we're expanding our core and existing business. Second, new channel and new market expansion. There has been a serious component shortage this year, but we took advantage of the opportunity arising from the shortage to adjust our product mix and extend into new markets. These new market opportunities might not have been available otherwise. But because of the ongoing shortage, we got to reach these new markets and new customers. Hytron, for example, heavily relied on the U.S. market. This year, we've reallocated the resources. Hytron's revenue breakdown will be much more evenly distributed next year, with the U.S. accounting for 50% and the rest growing to 50%. Third, innovation, which is about providing end-to-end value-added services. This is especially important for 5G, for which we will offer new products and services. Currently, 5G does not have a big contribution to our revenue, but from last year to October this year, we have reached the target we set, almost doubling its sales YOY. However, as a share of our revenue, 5G is not in the double-digit range yet. So, I hope I can provide more information in the near future. Moreover, we continue to create added values to our software offerings. We have our own cloud business, which grew by 50% YOY this year, with large economies of scale. Although revenue did not increase much so far this year due to the component shortage, the year-to-date profit was higher YOY. The EPS was 0.60 and 0.63 in the first 3 quarters of last year and this year, respectively. Obviously, there is still room for improvement. Peter classifies NCG as a high-value-added segment, but given our current gross margin, I think we still have more work to do. Hi, this is Peter speaking. I believe infrastructures are essential. In AIoT or other fields, such as this building, what differences will 5G make? Because high-frequency waves cannot penetrate walls, and different building materials and different floor plans create different restrictions, additional base stations are needed to allow the entire building to enjoy high-speed, lag-free communications without dead zones. For example, 5G may help ensure seamless communication for concerts held in the Big Dome or Little Dome Arena. With 5G, not a single corner of the Big Dome will be a wireless dead spot. You may think that there is Wi-Fi, and it will be fine. But if there are 300,000 of people accessing Wi-Fi at the same time, it will not work well. In addition, low Earth orbiting satellites, or LEO satellites, are also worth looking forward to. In the era of e-mobility, everything is connected 24/7. 5G cannot solve the dead zone problem of remote areas. Over the next 3 years, some 4,000 LEO satellites will be launched from around the world, which will create a new round of competition among chipmakers. These will not happen without infrastructures. If you've been on a cruise ship, you would know that onboard Wi-Fi is extremely expensive. Because there is no network once the cruise leaves a port, it has to rely on LEO satellites, and then provides internet connection to passengers through Wi-Fi. Today, we are thinking about the role of 5G in various smart applications. For example, what is the difference between a smart factory with and without 5G? What new applications can be created? And what added value can be generated? Alpha Networks wants to sell solutions, not just OEM products. Therefore, infrastructures are important, and we hope 5G will bring changes to various fields, making wireless communication as smooth and effective as wired. If I may have one more question, could you let us know what BSG's CAGR will be over the next few years? BSG has hardware, software services, and integrated solutions, and there are also domestic cases published on the official website, but are there any overseas client cases? Michael, could you elaborate on the business group's developments in Asia, Africa and other countries? Hi, this is Peter. Of all the business groups, BSG is the one that has made the most overseas acquisitions, from Singapore, Middle East, Europe to South Africa. So it has the strongest global presence in the group. This is Michael speaking. CAGR-wise, we're expecting 8 to 10% growth, which will be relatively stable. In Taiwan, infrastructure spending generally accounts for 1% of a company's revenue. In US, the ratio is about 6%. But currently, the average ratios in Taiwan and Asia Pacific are climbing fast. In the US, there is hardly any restaurant without a POS, but that is not the case in Taiwan. Our website mainly targets customers in Taiwan, hence only the local cases. And we have overseas sites for overseas offices. Currently, we have more than 100,000 clients. Our South Africa LinkedIn page alone has nearly 60,000 fans. In Singapore's Changi Airport, nearly 0.9 out of every 2 machines came from us. In Asia, we're working on online, offline and device businesses. Syzyg used to be the top 1, or top 2 company in the offline space. But for 2 years, we have been focusing on helping our clients move to the cloud. Our cloud business has been expanding by 50 to 100%. Because regular customers trust old partners, most of the companies we acquired have been established for 20 to 40 years. In terms of client cases in Europe and America, we helped the biggest supermarket chain in Poland, for example, to deploy a complete suite of systems, but the case is only being shared on our European website. Here is another interesting example. Our panels and systems are widely deployed inside pizza trucks. One of the leading pizza companies in the U.S. converted its pizza trucks, each carrying 120 pizzas. They drive the trucks to local neighborhoods to bake and sell pizzas on site. Also, in Mexico, the top 2 convenience store franchises and gas station brands are our clients. In China, we are a service provider to Haiti. Moreover, we delivered services to more than 3,800 Mos Burger restaurants across Southeast Asia. I majored in electrical engineering and computer science, and 25 years ago, I also studied data mining. Back then, few people thought data mining would be a big deal one day. Similarly, no one would have believed that one day, Walmart would be competing head-to-head with Amazon, and Amazon had to buy Whole Foods because of that. Companies operating in this sector generally have high PE ratios, and enjoy high customer loyalty. Our customer attrition rate is less than 2%. HR, production, operation, marketing, finance and R&D management are crucial for every company. In the past, we delivered services by providing devices and working online or offline. You have to be the leader in each region to create marginal effects. As all the management practices are moving to the cloud, each additional customer increases the cost. Therefore, we built a large cloud platform led by Esg, and make the platform accessible by anyone. Meanwhile, we rely on the existing IPC team to sell devices. Traditionally, Taiwanese OEMs had the same operating model, selling products all over the world. Although they seem to have formed some kind of relationships with companies everywhere, there was no O2O integration. That was the problem that we worked on solving in the past 6 years. The S company from Taiwan has done a good job. It has a very high penetration rate, and we use its applications almost on a daily basis. However, global expansion is never easy, so we work on one country at a time. We started by building a strong presence in Taiwan, Singapore, Hong Kong and Macau, where the combined population exceeds 40 million. Then, we go into Malaysia and other markets in Southeast Asia. Currently, we are entering Vietnam, which has a population of 100 million. After gathering the experience of serving 100 million people, we will go further. In Dubai, we have the largest market share, responsible for providing services to the equipment installed in most of the buildings. In South Africa, our service sales has exceeded 1 billion. Overall, we are growing nicely in the Indo-Pacific region. I'm Lisa, from Yanta Securities. Thank you for providing the detailed information on your short and long-term plans. Peter, you said that raw material shortage would be a concern in the near term. What is the Q1 and Q2 outlook? When do you expect the shortage to wane? Also, what's your outlook for the monitor business next year? Lisa, thanks for the questions. The cycle time of the monitor business is usually 6 months. So, for next year's projects, we've secured orders from clients. Based on what we have on hand, next year's demand will be at least on par with this year. When CPI and PPI continue to rise, banks will raise interest rates and tighten lending, and consumers will be reluctant to consume or defer consumption, which will happen at the end of December this year at the earliest, or Q1 and Q2 next year at the latest. In any case, it will be no later than the first half of next year. The situation may worsen week by week, and the impact will soon materialize. Early signs of a market reversal are emerging, so companies must run operations prudently. If consumers don't have extra money to buy new things, sales will drop, which may bring about cuts in orders, or requests for price reduction. When the market is in a downtrend, higher inventory levels mean higher risks. Therefore, companies must clear their inventories as quickly as possible. Currently, lots of inventories are in transit, either stuck in the supply chains or at the ports. Or, they may still be lying idle at factories for lack of complete sets of components. Whoever gets more semiconductors, delivers products to customers and digests inventories before the reversal will be able to come out unscathed. If not careful, many firms may suffer greatly. In fact, based on the inventory levels of companies that have released their Q3 earnings results, the change of market direction this time will be very challenging, given the significant inventory amounts and the steep increases in component prices. Taiwanese firms have done very well in the past 3 quarters, especially in the first half. But we will have to keep pushing ahead until we get to the end. Every company across the supply chain should be vigilant, be willing to work with each other, and offload excess inventories in the shortest time possible, so as to reduce risks and get through the crisis, setting up next year for success. Thank you for attending the conference today. Your support is the driving force for us to move forward. Our team will continue to work diligently to deliver results. Thank you. Ladies and gentlemen, thank you for participating in Kista Corporation's third quarter investor conference. We will upload the video of the meeting to our website. Have a nice day.